All right, everybody. Today I'm going to be explaining something, and it's the reading price and volume for one key behavior. All right, so I'll be explaining reading price and volume for two behaviors, which are the opposite of each other. So the first is ease of movement, and the second is effort reward. All right, so in ease of movement, from a price and volume perspective, from a price perspective, you typically have a big bar. So you'll have a bar, you have this bar, and then you have this bar. This bar, the big bar, has ease of movement because within the same time period of 5 minute or hour or day, or within the same amount of ticks, it was able to move more than average, move more than the prior bars. So there is ease of movement because in the same interval, time interval or tick interval, the bar was bigger. The distance from low to high is greater than average and definitely greater than the prior couple of bars. So that's from a price perspective. But also, it also means that when you have volume, let's just say this is volume. Let's say you have a little bit more volume here. You have more distance, all right? So a price perspective, you're just looking from high to low. And also considering volume, it means that when there's a significant amount of volume, there's a significant amount of price, and therefore they are proportional. All right, so that's ease of movement. Well, that's about it, right? Now, I'm not getting into climaxes and things like that. I'm just saying that in general, they are proportional, all right? So that's it. When you talk about effort reward, they're not proportional. They're the opposite. Meaning, you had, let's say, higher volume, but not a lot of price spread. So this is why you had a lot of volume and not a lot of price spread. And you'll see why I'm explaining this. All right, that's what's really going on. So you have all of this volume, but it doesn't go up a lot because someone's selling into it. Someone's selling into it. It's encountering distribution resistance or accumulation support. That's what's going on. Now, why I mentioned this is these two are opposite. So ease of movement is the opposite of effort reward. And why I mention this now And now that you have the basic idea, it's all about are they proportionate or not? Is price and volume proportionate or not? If it's proportionate and you have a big bar, it's easy movement. If it's not proportionate and you have big volume but not a big bar, it's effort reward. All right. Now another way of viewing effort reward, which a lot of the more technical folks will kind of understand it a little bit better, is that volume is the input, price range is the output. All right. So this is a better way of understanding it. If you have a lot of input, you should have a lot of output. But if you have a lot of input and you don't have a lot of output, you got a problem. So this is the input. Where's the output? There's no output. There's this average output, but a lot of input. So this is one effort reward can also be viewed as volume, input, output. That's how it can be viewed. Volume is the input, and the price distance covered, or the length or distance from high to low, is the output. Now, why is this important? You'll see why. I'll give you some examples why it's important. Why is it important is because typically when a top is formed or a bottom is formed, you have this phenomenon of both effort reward and ease of movement. So when a top is formed, right? When a top is formed, you have both effort reward and ease of movement. All right. A lot of times, same thing with the bottoms. Same thing. Like I was saying, that that when you have a turn, you typically have both phenomenon. All right. So why this is important? Because you have both phenomenon typically when you have a turn. Why? Price typically goes in the area of ease of movement, and it just can't get past the area of effort. Why? Because the effort is distribution or accumulation. So up here, you'll have evidence of effort, evidence of distribution manifesting as effort, right? And over here, you'll have the ease of movement to the downside, which will be your change of behavior, or your sign of weakness. It's the same thing. Sign of weakness, sign of strength. Sign of strength would be bullish, sign of weakness would be bearish. But they're both change of behaviors. Alright? So I'll just show you examples of this. This happens on multiple time frames, and it happens a lot. Alright? So why this is important? Again, effort and ease of movement important because that's what happens at tops and bottoms. At a top, when then distribution, you typically have effort. At the bottom, you'll have effort, and the reversal will have ease of movement. So that's why it's important, and that's why you need to know it. So I'll just show you an example. By the way, this example that I'm going to show you, I'm going to utilize the tape reading chart. You can use any chart that has volume at price. Alright, so you can use any price volume chart that has volume at price, or just volume and price. That's enough too. So this chart is a type of chart that is just something that Wyckoff, I think he invented it. Anyway, so let's take a look at two markets. The first market is going to be copper. In this market, is going up and up and up. And I think it was here, right here, this copper, where you have a turn. So this is a top, and it's a turning point, and price goes down. So at this area, we are looking for effort on one side, meaning as you go up, there's effort. As you go down, there's ease of movement. As you go up, there's effort. As you go down, ease of movement. As you go up, there is distribution, aka effort. As you go down, you got ease of movement. All right? So now we look for, where is this? So this is it. It was going up, right? It's going up in the morning, going up in the morning. And I found this right there. This right here. There is a lot of volume, a lot of input, right? There's a lot of input. And what is the output? This is the output. This is the range, the high to low range. Look at all this volume, and what does it produce? What is the output? All of this input with the 35 means that it's the biggest green bar and 35 green bars. That's a lot. And it produces this much output. So big green, no cigar. Right? No output. So we have evidence of effort, and immediately you see the red, and here's your ease of movement to the downside, where you have biggest in 30 red bars, volume, biggest in 30 red bars, and look at the output, the range, big input down and big output. Here, big input, no output, little output, very little. That's effort. Big input, small output. Here you have big input, big output, proportional, ease of movement. This is effort. This is ease of movement. To the downside because it's red, it's selling. After that, tap, and down she goes. Again, effort is when you have a lot of input and very little output. This volume is the input, and your range is the output. You have a lot of volume and not a lot of range. Ease of movement is when you have good volume and you have good range. You have good volume and good range. Ease of movement to the downside. Boom. Down she goes. All right? Second example, today, we'll be on this crude reversal right here. So move to the crude chart. This is the crude chart now. I selected crude. And now, can you tell me this right here, is this a lot of input? 95 is the biggest volume in 95 red bars. What do we get for it? This. 95 red bars, and this is what you get? So input is this, output is this. 95, biggest in 95 red bars, biggest in 95 of those red bars. And you get this little toad, this little bump. And what happens is accumulation. That's why it's not a lot of ease of movement. Instead, it's effort because it can't go down. What happens afterwards, you just need some volume, biggest than only 3 bars, and you get the same move up. 95 versus 3. So that means that you have ease of movement on the upside where you have this and that, meaning you have this much volume and you have price going up. That's ease of movement. They're proportional, right? They're proportional. Here they're not proportional. Here they're not proportional. Okay. Now sometimes later on, it's not always that easy. You have to be waiting for it and understand and all that. You can't just do it blindly, right? So over here, for example, this is a clear example of a lot of volume. Look at what you got for it. Look at what you got for it. A lot of input, not a lot of output, and boom, breakdown, right? And sometimes you can't just use it blindly, because over here you have a lot of input and you have not a lot of output. This looks like effort, but it's really like just trying to absorb and go higher. So you still need judgment. You cannot just put like a signal or anything like that. It's not right. You have to use judgment with the way it looks on the chart. Understand that it's pulling back. When it's pulling back, obviously they're going to be looking to buy the pullback at a demand area after a demand rally right here, where you have ease of movement. It's the biggest in 87, and what happens? You have big green, right? Big green input, and you have good output. You have a lot of volume, and you have a lot of range. So there's ease of movement, and it pulls back until there's effort, meaning this is the reaccumulation, and now they're ready to go up. Bang. So this is the reaccumulation to re-markup or continue markup, right? And on the, this was right here, the reaccumulation right here. These bars going sideways and then, do a little spring and then go up. That's what happens. All right. So again, the idea is proportion, volume should be, price should be price distance, meaning from high to low, the amount of movement should be proportional to the volume. When it isn't, look for possibilities of accumulation, and look for possible accumulation / distribution, because that's what it is. If you have a certain price and everyone's selling into it and it's not going lower, it's because there's a huge buyer there. What is he doing? Accumulating. That's why price is not going lower. And that's why there's no ease of movement. And that's why you have a small range. That's it. So this is a key thing you want to look at key areas. This thing is going up, 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 this trend, right? It's going up, 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 and then you see the shortening of the thrust and blah, blah, blah. And then over here, you're going to have effort, and then you'll have the ease of movement to the downside, and then it'll basically do something like this. That's what's going to happen. And not only that, this test will be against those levels of high volume where the distributors were. and nail it. So this is very important. Okay, this is how you read volume. Volume is the input, price is the output, and one key behavior you get is by, actually two key behaviors you get is by focusing on proportionality and seeing, is the volume and the spread in proportion to each other? And based on that, looking for ease of movement versus effort. Ease of movement versus effort based on proportionality between the price distance and the amount of volume. The volume is the input and the price distance is the output. Done. All right, thank you. Bye.